Good morning, I'm Richard Higgs from Harold Stevens. We are later life financial and legal planning specialists right here in Westbury-on-Trim in northwest Bristol. And today we're unpacking the Residence Nil Rate Band. So as you probably know, everybody gets 325,000 of assets where there's no inheritance tax to pay. For the married couple, that gets transferable to the surviving spouse, so that equals £650,000 of assets where there's no inheritance tax to pay. On top of that, each individual gets £175,000 of house, effectively, where there's no inheritance tax. Again, that's transferable to a surviving spouse, so that would be £350,000 of residence nil rate band of assets on a house where there's no inheritance tax to pay. It's claimable, it has to be claimable by your executors after you've passed away. And so that would be £350,000 of assets on the house where you shouldn't be paying inheritance tax. Now, there's a number of reasons why you might not qualify or you might lose this extra allowance on the house. Probably the most obvious one is if there's no property in your estate. I would caveat that there's other ways around that, but obviously if you've never had a property, there's no property in the estate, it might mean that you don't qualify for the Residence Nil Rate Band. The other common reason is if you don't have children or grandchildren, basically what's called lineal descendants. You have to leave the property or main residence to children or grandchildren in order to qualify for the Residence Nil Rate Band. So if you don't have children or grandchildren, usually you don't qualify for the extra Residence Nil Rate Band. There are different criteria around stepchildren, adopted children, so get in touch if your situation is a little bit different, but generally speaking, you need direct descendants, children, grandchildren, to qualify for the Residence Nil Rate Band. If you leave the property to non-qualifying beneficiaries, therefore, it means that you don't qualify for the Residence Nil Rate Band. So that could be friends or anybody else other than direct descendants, including discretionary trusts. I will come on to trusts in a bit more detail in a moment, but if you leave the property to a discretionary trust, it means that obviously the children haven't got an automatic right to the property, and that would mean that that would disqualify the property from the Residence Nil Rate Band. Any gifts that you make to grandchildren of property in the will, where the contingency age is above 18, would mean that you disqualify yourself from the Residence Nil Rate Band. So the maximum age to grandchildren is 18 in the will. And also, obviously, if you don't have a property above the Residence Nil Rate Band, or if it's below, so £175,000 of property for an individual, £350,000 for a married couple. If your property is worth less than that, obviously then you don't qualify for the full Residence Nil Rate Band. As I mentioned, the Residence Nil Rate Band is transferable between spouses. So on first death, the Residence Nil Rate Band can be potentially transferred to the surviving spouse to give that surviving spouse's estate £350,000 of property that's not subject to inheritance tax. So perhaps let's go through some advanced provisions, some planning opportunities to look at. If your estate is worth above £2 million, and that includes all of your assets, investments, property, any investments that qualify for business relief still get put into that whole estate, excluding pensions, although some pensions are included. So if you do have personal pensions, significant SIPs, let me know, let me have a look to make sure that they are excluded. But generally speaking, all of your assets are included in that calculation. If your assets go above the £2 million, your residence nil rate band starts getting tapered down. For every £2 above 2 million, it goes down by £1. So it means that For an individual, your estate, if it's above £2.35 million, you've lost the residence nil rate band, and for the married couple, 2.7 million is the threshold where you've lost completely the residence nil rate band allowance. So clearly there's some planning to be done there to try and keep your assets below the £2 million, whether that's by gifting or putting money into trust or other inheritance tax strategies. £2 million is the number to look at. It's highly tax efficient to keep your assets or your estate below the £2 million mark. Let's look a little bit more about trusts. So it's quite common for people to leave their property or other investments into trust on death for various reasons, whether it's care costs protection or bloodline protection, or making sure your assets go to exactly to the people you want them to go to at a time that you want them to go to. Now, as long as you've left the property in the trust to direct descendants, so the beneficiaries of the children or grandchildren of the trust, then that's absolutely fine, and the trust should still qualify for the residence nil rate band. But if you've left the property or other assets to a discretionary trust, it means that the children, grandchildren aren't automatically beneficiaries of the trust, and the estate might lose out or would lose out on the extra relief provided by the residence nil rate band. So that's potentially an extra £140,000 of tax to pay if that's done incorrectly. Also common was the remember the old nil rate band trusts, which was very common to be included in a will to make sure that a married couple both qualified for the nil rate band. This was done before 2007. Now you can inherit, transfer between spouses the nil rate band. So any old wills that include that definitely need to be looked at to make sure that they potentially take out that provision, because it'd be much more tax efficient to have the nil rate, the residence nil rate band included in the will. So any old wills, get them reviewed professionally by your legal advisor. Also downsizing. So as long as if you sold a property or you gifted a property after July 2015, you can still qualify for the residence nil rate band as long as you've got some assets in your estate which take that property's place effectively. It's included in the downsizing addition provisions within the legislation, so it's all catered for. It can be quite complex. So again, take legal professional advice over this. But even if a property is not in the estate, but it was in your estate at some point during lifetime, it's probable that you can still qualify, your executors can still claim the residence nil rate band. Also, there's complete flexibility on what property that you can claim this relief on. So it might be a holiday home, it might be a home that you lived in at some point during your lifetime, and there's clearly some planning to be done around that. It might be more tax efficient to claim the relief on certain properties. So again, take advice on that when it comes to it. Like always with this, the most important thing is to get your will correctly done and tax efficient in lifetime. That's the most important thing. So if you're looking to get your will done, if you've already got wills done and you're perhaps a little bit concerned about this extra allowance, just let us know and we can kind of review things for you. If you are in a position where you're dealing with an estate and it is tax inefficient because it doesn't reflect the new rules, there are troubleshooting ways that you can kind of organise this. So perhaps through a deed of variation, if all the beneficiaries agree and you get things done within the 2-year time frame, a deed of variation could perhaps organise the estate in a much more tax efficient way. A deed of appointment could be used to transfer a property out of a trust directly to children, grandchildren. as if the trust didn't exist. Obviously, you lose the control of why the trust was set up, but it might be a much more tax efficient way of doing things. And of course, the downsizing provisions, as I said, again, if you're an executor trying to navigate your way around the downsizing provisions, definitely take legal professional help over that to make sure that the estate is the most tax efficient it can be. Residence Nil Rate Band, it's not the simplest piece of inheritance tax legislation. So if you are in that situation and you're looking to make sure that your estate is the most tax efficient it can be, definitely book for an initial meeting with ourselves, and we'll take you through the provisions to make sure that your estate's the most tax efficient it can be. If you would like to leave a comment down below, if you're in a certain situation, I'll get back to you. Let's get that conversation started on the comment section. Like and subscribe to our YouTube channel, which is always trying to give people interesting videos on later life financial and legal planning issues, so that'll keep you abreast of what's going on. And thanks again for watching, and we'll see you at the next video. Okay, bye.